are taking a toll on some of the metal prices, or have taken a toll on the metal prices. Raw material pressures faced by the steel companies domestically as well has that bit of an impact. The question mark is, can sporadic rallies that we see in some metals, particularly iron ore, etc., change that outlook? And what about the companies dealing in some of these commodities? And what's the outlook really, global outlook for the space? Let's put that question across to Rakesh Arora. He's managing partner at Go India Advisors, joins us right now on the show. Rakesh, so good having you. If I were to look at what's happening to iron ore market, it suggests a completely different picture. But I remember a conversation 6 months ago wherein you had mentioned that the health of the metal companies doesn't seem to be so strong that they can do those large expansions, and the commodity prices would at some point of time come under pressure. That has happened. What next from here?
So see, iron ore is following a different trajectory as compared to other commodities because of the disruption that we have seen in iron ore production both in Brazil and in Australia. So that is a reflection of shortages in the supply. But the same sentiment is not shared by the other commodities. So it is not really driven by too much of demand, and eventually as supply catches up, iron ore prices are definitely going to come down. But coming to India, the story is totally different. Indian iron ore prices have not really moved up much. Global prices are up 50-60% in the last 3-4 months, whereas Indian iron ore prices are up like 10%. So there's scope for Indian prices to still go up, even global prices, start to correct a little bit.
Okay. Rakesh, if indeed the crude price behavior yesterday is any indication, despite supply side constraints being made evident by OPEC+, there is a correction which seems to suggest that the markets by and large are still concerned about global demand. Do you reckon that continues, or that will continue to weigh in on global metal prices as well?
Definitely, demand is the major driver for commodity prices. Shortages normally don't last that long. Supply response is seen within a few months. So there is a genuine worry about global slowdown, and that is getting reflected in all the other commodity prices. And oil is no different, despite the production cuts.
I reckon that you believe that the prices which have not gone up dramatically till now might continue to remain under pressure in India too. And in India, the iron ore prices, despite the uptick that we've seen, at some point of time will rebalance and start correcting. Am I understanding you correctly, Rakesh?
So India, the dynamics are slightly different because we have a watershed event coming in March 2020, where 40% of India's iron ore production will be impacted because all these mines, which are merchant mines, are coming up for re-auction. And there is likely to be disruption because there are a lot of things governments need to correct before these auctions can go smoothly and the handover of the assets can happen. Meaning some of the things are, there's a lot of low-grade iron ore inventory which is lying on the mines, and that has to be bought over by the incoming guy. And the numbers are like $3-4 billion worth of these kind of iron ore. So it's not going to be a straight, journey. So disruptions are going to happen from March 20. So probably Indian iron ore prices will follow a different trajectory as compared to global prices. Currently, these mines are trying to produce at their best. And that's why there's a little bit oversupply in domestic market. But come March 20, there will be a different scenario. There could be shortages, and Indian iron ore prices can shoot up.
Okay. What about steel players in that scenario? And do you believe there is any possibility of domestic steel companies hiking prices because of the increasing raw material pressures that they are facing?
So while global iron ore prices, global steel prices have started to correct, despite iron ore prices going up, Indian prices are likely to follow that same trend. I don't think Indian iron ore steel producers have an ability to act differently to global steel price scenario. So they will more or less follow what the global prices are. And we are also getting into this lean season right now, where demand is slightly lower. So I don't see steel prices going up in the next 3-4 months. until unless we start to see some stimulus, being given in China and economy starts to recover.
You would reckon, Rakesh, and I'm guessing it's an obvious answer, but you would reckon that the Chinese growth data improving, is that one key monitorable for global metal prices to do well? I mean, look at across the board, aluminum, nickel, etc. Everything is, most base commodities are not trading well. The print in the China data would be the key factor.
Yeah, if you look at the PMI data which has come out day before yesterday for China, Europe, everywhere it is, indicating a slowdown. And China being 50%, market share in consumption of all these commodities, it plays a major role. So undoubtedly, all eyes are on China. China can turn around the things. India is like 5% of global demand. It doesn't really move the needle, even if we do well. So China is the main driver of commodity prices.
And what about looking at these companies from an investment perspective? 12 months ago, everybody was talking about how some of the steel companies could become companies in which investments would yield results and meaningfully from there. Some of them have halved, some of them have corrected 1/3. Is the cost benefit or the value proposition attractive enough right now? Or is it too volatile to place a bet currently?
Well, see, given the background that we just discussed, that iron ore prices can shoot up by fag end of this year, it is better to be with companies which are fully integrated on iron ore. And talking about steel versus base metal, I think steel still has a better chance because government can intervene and try to support domestic prices if things were to turn really bad. They haven't shown the same inclination for aluminium, etc. So, fully integrated steel companies could be, or a pure iron ore mining play could be the companies to watch out for.
There was no compulsion, Rakesh, to necessarily invest in metals. Would you avoid that pack completely right now?
Well, see, there is value in some of the small cap steel companies which are fully integrated. Some of them are trading at like 3-4 PE. So, given the dislike for small cap companies right now, there's a lot of value which is available. So I won't really shun the sector totally, but look for niche opportunities out there. But overall, there's no hurry to buy metal stocks.
Okay, no hurry to buy, maybe some of the smaller names out there. Rakesh, while you are with us, before we end this conversation, one word on cement as well. As promising as the demand looked, and the data for the first 5 months seemed promising on the price front as well. Somehow something or the other comes in and becomes the party pooper. What's your sense of how cement shapes up now?
Well, I think for FY20, cement is looking really good because after a period of 3 to 4 years, their margins are going to be, where Street was expecting a long time back. So we are expecting companies to do 1,200 to 1,300 rupees per ton EBITDA margin. And the demand is going to be, around 6-7%. I don't think it's going to surprise positively. And so overall, I think cement companies are better placed. At least the earnings would be, on a YY basis, much higher, and that should support the stock prices.
Okay, so Arun Jaitley's tweet yesterday or day before yesterday, Rakesh, seems to suggest that the market if it was anticipating a large GST cut on cement, it may have to look otherwise. The cement companies will absorb that disappointment, you reckon, if indeed there isn't any tinkering out there, which seems to be likely as well?
Well, see, until unless the GST, collection numbers improve dramatically, I don't think Street is expecting any kind of GST cut on cement. So while, on and off there is some expectation, but nobody really, in terms of investors, are expecting a GST cut.
Okay, it's good to get that clarification because the conversations normally seem to suggest that if there's no GST cut in cement, everybody would be disappointed. I'm glad that this view has also come about. Rakesh Arora, so good having you. Thank you so much for taking the time out and being with us today. Appreciate your time.